But the reason the big five are dominating is they've been around for decades. They know what inflation and an interest rate cycle looks like. Are they still going to be good value in the longer term?
Absolutely, and we'd sort of differentiate between the good tech and the bad tech. And I think a lot of the bad tech has been sold off, and justifiably so. Some of the valuations were ludicrous, and you've seen stocks like Robinhood or Wish.com. These are companies that don't have an established moat. They're in that early stage of their life cycle. Whereas you look at the big tech companies, and as you rightly point out, these are huge companies that have made an incredible amount of investments in things like the cloud and AI. And this is really building their moat around the business. So what we'll see is, despite the fact that these companies have been sold off with the bad tech, people should really focus on the good tech, because it's going to be around for a very long time, and they really are the blue chip stocks of today. So you can acquire them at much lower prices, and you should take that opportunity and add to those positions.
And of course, talking about what is good to buy, you sort of hinted that there's good tech and there's bad tech. What is there to avoid? Is it a company with no foreseeable future when it comes to being profitable?
Yeah, absolutely. You really want to see a clear line to profitability. And from Swell's perspective, we actually want them to have a strong moat, a moat that's widening. And that's where we spend most of our time identifying these businesses. You really want to avoid those companies that, I guess, they're questionable business models. And if you think about an economic moat, a lot of these businesses, like a Wish.com or a Robinhood, they don't have a strong economic moat around them, protecting them from competition. So really, they're the ones you want to avoid. And if you look at, I guess, a Robinhood or a Wish.com, the prospects, yes, they may have revenue growth, but are they really going to deliver significant profitability for investors over the long term? We'd say no, and if they do, look, we're happy to miss those ones to stick with the tried and true performers.